So, as I said, that today's topic is going to be about day trading and swing trading, and whatever we are going to discuss, as we have always talked about, guys, these strategies or these ways how to trade. This is for information purposes only. Even after learning something in this session, if you want to apply it on your live accounts, I would still suggest please talk to your risk experts first, talk to your investment consultants. Always have a second opinion before you execute any trade or before you take any investment decision. And as I said, that obviously the purpose of these sessions is to make you more independent so that you can take your investment decision right. But a second opinion has never hurt. So the idea is that during these sessions, when you learn, you should understand the concepts, you should understand these terminologies which otherwise you would skip. And we'll try to simplify this as much as we can. And as I said, if you find something really good, you can note it down on your notepad. Or if you want to have a one on one session and learn more about this, we are definitely there for you. I think over the past few days, everyone who has attended a live session has also demanded for a one on one. And most of you have done a one on one session with me. And that's why um, I continue to bring that point out that if you really need, even after this session, if you find something really nice and you want to learn more about it and want to have a one on one session, just talk to your relationship managers and they will. Uh, quickly try to fix up a session and we can sit together over a Zoom call, or you can come to the office and we can definitely sit together and have a session. Now, understanding what is swing trading, how does it work, or what is day trading, how does it work. So, we're going to understand each style of trading. We're going to learn about the pros and cons of day trading, swing trading also. But that being said, um, which trading style is better? That is the question which a lot of people ask, right? When there are a lot of people who normally feel that, okay, is it better to day trade or swing trade? It's one of those eternal questions. Every trader has an opinion, right? Um, I think I have thought about this a lot over the years, and I think I've heard a lot of traders' opinion on it. And I'm telling you, there are a lot of reasons that you would want to choose day trade, or sometimes you want to choose swing trading. But then I think we should definitely think about our time commitment, how much we can involve into it, what is our objective. And at the same time, we have to understand that between day trading and swing trading, there will always be a time that you would be making some profits, some losses, right? So it's not that one strategy is better because you make more money in one. Both the strategies have their pros and cons, as I said. Let's try to understand one by one, and let's try to understand that how we can actually try to implement either of these strategies, or some at least we'll get an idea that what sort of a trader we are. Because there are a lot of situations we'll see, and during that situation sometimes volatility will play a very important role. Yesterday we talked about that how volatility can create an opportunity. But even in day trading and swing trading, volatility brings a very important point. So swing trading is basically a strategy which involves holding positions. And when I say positions, that means the trades allows you to hold the trades for a few days or a weeks. Please understand, this should not be confused with long term trading. Okay, long term trading is mostly what we call there are a few months and years. When we talk about swing trading, it's one of those trading strategies where you hold your position for a few days or a few weeks. And it basically, the trading style is less concerned with a market's second to second price movement, right? So you don't really care that how every minute market is moving. Like a scalper, it really affects anyone who's doing scalping, because scalpers, they trade second to second, minute to minute. Okay, but as a swing trader, you don't really care about that kind of price movement in a product. You use these products to speculate on the market that are bullish or bearish, providing greater scope to realize a profit with an overall trend. So what we are trying to understand is, as a swing trader, what you're actually doing, you are not really concerned about these small price movements of minute, 10 minutes. You want to enter at a time where you feel that from here the markets are going to go up, and you want to hold on to that position for a longer period of time and try to maximize your profit with the overall trend. What is the overall trend? Overall trend means maybe gold prices drop a little today, but over the long run, if we see for the next last 5 or 6 days, the prices have continued to go higher. So that's the overall trend that is positive, right? On the other hand, we talk about day trading. We hear a lot of times intraday traders or day traders. What is day trading? Now, day trading often used to gain exposure to short term price movements. People who favor day trading will open and close multiple positions during one day, right? A reaction to daily news stories, market moving. So, every news which is coming, every economic calendar, which is, if you see in the economic calendar, every single news, it would uh, influence day traders to place a trade. Day traders, they prefer higher market volatility because they can do more in outs, right? You can take a buy position, you can take a short position, and they want to make more money with a shorter space of time. Now, it's possible because the number of trades they do are higher. So if markets are moving a lot, as a buyer you are making money, as a short seller you are making money, so you end up making, probably you might end up making a lot of money. That's why a lot of day traders, they love what they do, right? And one very important thing, guys, which I want to tell you here, when I talk about that day traders make money or swing traders make money or larger profits can be made, or this does not mean that I am assuring you or guaranteeing you any profits. Please remember this, nobody in this world, whichever trading strategy you apply, there's no way that anybody could assure you or guarantee you that this is a good trading strategy and you can always make a lot of money. The point of implementing strategy is to make money. However, sometimes there are good days, sometimes really bad days. So when there are bad days, your stop losses get hit. When there are good days, you end up making money. But that is implied. Please understand. And in spite of that, there are a lot of traders who try to implement these strategies and see that whichever works for them. Now let's understand a basic difference through a diagram, that what day traders are and who are swing traders. So as you can see, somebody who would buy today and by the end of the day sell that position, that's a intraday trader or a day trader. Okay, but somebody who would buy a position and keep it for a few days or for a few weeks and then sell it, it's called a swing trader. Okay, so swing trading versus day trading, this is something very important, guys. Again, very important difference, that a day trader, irrespective whether he made profits or losses, by the end of the day he must close his trades. That is what day traders follow. Swing traders, on the other hand, they take positions, they hold on to it for a few days or a weeks, and then close the trade. So it's, first of all, the duration, something which is the most important part. Now let's understand these basic differences between swing traders and day traders. As I said, trade over days or weeks. Day trading, as you see, trading multiple times throughout a single day. So when you look at swing trading, maybe somebody placed a trade today, bought something, and now they are holding on to it for another 3 days or 4 days before they close it. So they are not trading every day, but when they are trading, they are buying that position for a few days or weeks and holding on to it. So it doesn't mean that a swing trader must put 5 or 10 trades every day. He could just place one or two trades and just hold on to it for them a few days. So that's a swing trader. Day trader, on the other side, would trade multiple times throughout the day because they are trying to make the best out of this day. By the end of the day, they will close this all the trades which they have, profits or losses. Next day, new trade, new trend, and they will start again. Swing traders, they incur overnight funding charges because these are margin trading accounts. See, swing trading, day trading, it is done on leverage accounts. These are very two distinct styles of market speculation, but they are done in margin trading accounts, right? So when we see a lot of times, if a swing trader holds on to the trade overnight, then they have to pay charges, right? So as a day trader, you don't really hold on to the trade overnight because what happens if a day trader, so we'll obviously discuss the basic understanding and the size of the trades also, because a lot of times happens even if you see the last point between swing trading and day trading. Swing traders, they open fewer positions and try to make greater gains, higher gains with fewer positions, right? But in case of day traders, they open more positions and try to make these smaller profits or losses. But one thing also about day traders, sometimes they take higher leverage. Higher leverage means their deposits are small, but the value of their positions are really high. So margin trading accounts allow you to take a high leverage trade. And even a swing trader, they can also take a margins trading account. Now the thing is, if you're holding on a leverage trade for more than a day, you might have to pay the overnight cost. So, like a lot of traders, they are taking larger positions or leveraged positions, like stocks, for example, or index, for example, gold or crude oil, cryptos, for example. These days, cryptos are also available in the form of derivatives. So, a large position again might have to be held on for one night, and that might incur a larger holding cost also. In case of day traders, they don't really have to, right? Because by the end of the day, they close the trade, so they don't have to pay the holding cost. And duration affects the frequency of trades, right? Because if you see swing traders, they trade less frequently because it takes longer for their trades to complete, right? Like a stock, for example, uh, you bought today, you are holding on to it for 3 or 4 days. So the number of trades are less, but if still you are holding a trade with a higher value, you still pay a holding cost, right? So this is something which we have to understand, guys. There are differences between a day trader and a swing trader, and there are also differences in how do you spot. We are going to focus today more on the swing trading part, because see, day trading, obviously we are going to look at a few technicals and see how day trading can be done. As you can see, day trading, you have to give more time, because throughout the day, if you are engaged into buying selling buying selling buying selling, obviously if you have a job, you cannot focus on that because throughout the day you are busy, right? You will definitely close your positions at the end of the day, but more trades you do, higher commission is charged to you, because every time when you place a trade, a transaction cost is charged. In case of a swing trading, you can hold positions overnight, so you pay the holding cost, but at the same time you dedicate less time to trading, right? You open fewer positions, but you try to gain maximum profits. A lot of clients which we have here, a lot of them are mostly swing traders, so very few of them are day traders. The ones who are day traders, again, they're taking care of their accounts on their own, but the swing traders are the ones who also place trades, but they hold on to it for a time and see once the market favors them, and again they try. So we'll talk about first pros of day trading. Let's understand, there is no overnight risk, right? Because you close your trade by the end of the day. So even when you have taken a bigger position, and if you slept, tomorrow if the price drops overnight, then you have a margin call. You don't have enough money, your account gets liquidated. So that's a bigger problem if you're holding positions overnight with insufficient margin. But in case of day trading, if you're closing your trades by the end of the night, you sleep peacefully. Second, quick profits. Obviously, if you're a day trader, it will allow you to capitalize on smaller daily price movements. Like I'll give you an example. Today, gold prices have gone down to 25.69 and it has been higher around 25.85. It has already moved around $15-20 before the big news comes out, which is FOMC tomorrow. Now, the question is that between this $15-16 movement, how many times the day traders would have entered and exited? So if it is done correctly, these small profits can add up to a one large gain. So quick profits is one of the pro. High liquidity, of course, there are a lot of day traders. They usually trade in very liquid markets. So it's very important. Why? Because if ups and downs or buy and sell can actually be done faster, liquidity is available, people can enter and exit without worrying about the price. So that is where a lot of day traders they lie, because they know that there is a lot of liquidity in the market. They can buy and sell, entry and exits are there very easily. If gold is moving today at $15 up, anybody can buy and then sell it real quick in a spur of a second, which allows a day trader to take another trade real quick and sell it. So these are few advantages. On the disadvantages side, stress levels are very high. If you're a day trader, you have to understand that stress levels can be really high, because if you have done 5 or 6 trades in a day, market has not gone in your favor, then you are stressed because you're ending your day with a very disappointing way, right? And disappointment, of course, as a day, I have done day trading a lot of times, and not every day is a good day. So obviously, throughout the day, when we are looking at the prices and doing buying and selling, sometimes we have to cut our losses and get out by the end of the day. So the stress levels are really high. Significant time commitment. You have to give a specific amount of time. To give you an idea, you're based in UAE. Today, Asian market opens, Japan opens 3 a.m. UAE time, 3 in the morning. By 11 a.m., UK and Europe opens. By 5:30 p.m., US stock market opens. So in UAE, if you start your day at 5 a.m. or 4 a.m., you will continue till 12 a.m. and by the night until the markets close, because you get to trade in Asia, you get to trade in UK and Europe, you get to trade in US. And in UAE, all these trading in all these three time zones is possible. I mean, that's a very strategic time location. Uh, this is very difficult and different for other nations, because imagine that while US opens in the morning, here it is 5:30 p.m. and yet you can cover the entire US trading market along with Europe, followed by Asia. So this is a good place for a day trader, but then you have to commit that much amount of time, right? And then potential for large losses, because if properly risk is not managed, day traders can lose a substantial amount of money in a very short period, because you're doing more and more trades, right? More trades you're doing, sometimes it happens your behavior gets the best out of the market, and that is the reason why a lot of day traders they lose money also very quickly. There has to be a certain amount of discipline which you as a day trader need, right? So I mean, of course there are pros and cons, but I want you to assess both. It's not something that if you do one you will get benefited. It's more about understanding your risk. Fast frequent trades can be more stressful. Sometimes you might make some error. Faster trading might not be able to calculate the trades right. Then there is so much intensity, right? You're glued to the desk, staring at the screen, constantly scanning the charts, searching for next trading opportunity. Sometimes, obviously, markets are much more noisier, right? The price movements can be very distorted, sometimes zigzag motion. Because if you're looking at a very shorter time frame, which is what day traders do, they look at a very shorter time frames. So shorter is the time frame, more market noise there is, right? A lot of day traders, they try to see very short term time frames and try to see that how they can make quick profits in smaller time frames. So that their pricing can be very distorting. Like the movement, it may not assess the right trend. So yes, there are these things which we have to understand. And while we talk about swing trading, again, swing trading, as I said, that where day trading requires buying and selling within a single day, keeping don't have to keep any positions overnight. But then swing trading is different, right? In case of swing trading, we are looking at a very different perspective. We are looking at buying and holding on to it for some time. So swing trading is basically, you can also call it some sort of medium trading style, or medium term trading, if I were to put it right. And uh, why medium term trading? Because when you are doing swing trading, you open a position, you only close it after a few days or weeks, depending is on whatever was your overall trading plan, right? And it's a very popular trading style, especially for those people who do not have much time to constantly monitor the markets. This can be done part time, not as a part time job. I'm saying that this can be done, not necessary that while you are working you have to look into the markets, because this is a very common uh, reason why a lot of traders, a lot of potential traders, don't even touch the markets, because they feel they're under an impression that I must trade every day to make money, and I must be glued to my desk, and that's why they never pursue this. But that's not right. That's just one kind of strategy. If you're a swing trader, you don't have to give much time to constantly monitor the markets. uh, you can again take margin based trades, leverage based trades, but then you can always look at a bigger trend rather than looking at a smaller or short term trend. Look at the market sentiment, and look at those markets where you can do entry exits also. Trading volumes are higher because you're not going to open too many trades. It's just most likely you are going to buy, hold on to it for some time. That's what position traders also do. There's a swing trader, there's a position trader. Position trader buy and hold slightly longer. Swing traders, they would buy and sell within weeks, but the idea is same, right? Like swing traders mostly, as a swing trader, which kind of asset classes you are looking at? Now this is where it's important to understand. You're looking at, probably if you're looking at foreign currencies, you're looking at foreign currencies like euro USD, dollar yen, pound dollar, something which is more liquid, something which moves also, volumes are higher. You're not looking at Mexican pesos or Turkish lira, right? Not too many cross currency pairs where there is enough liquidity, enough volume. You're looking at commodities like gold and crude oil. You're looking at indices like Dow Jones, S&P, Nasdaq, right? So this is something which is really important. And I'll tell you also that how there are few technical studies which swing traders basically use. uh, Various technical analysis indicators. There are Fibonacci retracements, support and resistance, RSIs. The ones which are easier to understand, obviously I can bring that in, and you can see that how understanding this can really help a swing trader to trade also. Now let's understand how, as a swing trader, what kind of tips we should know and what are the things we should understand also. And then we'll go to the live platform and try to apply, right? Because at the end of the day, it's important that we should also understand that how this swing trading or day trading can happen. Again, as I said, the answer that which is more riskier, which is safer, we are going to have a look at that also. But then let's understand that what kind of strategies are there, or what kind of tips we should follow while we are understanding swing trading or day trading also. So as you can see, the first and very most important part of understanding this is aligning your trade. You have to align your trade with the market direction. So there are two important kinds of trends. One is a primary trend, then there is a secondary trend. Primary trend is something which goes for years, big overall trend. Between that primary trend, there is a secondary trend. A secondary trend is that while there's a big bullish market, somewhere we see markets coming down. That is your secondary trend, right? That small bearish trend. In the long term primary trend, there is a short term bearish trend, that is your intermediate trend. So as a swing trader, you should stick to the primaries and the intermediate trends. Don't go to that very short terms, minute to minute trends. That is where the day trader steps in, right? Long your strength, short your weakness. Like once you know what is the overall trend, like don't fight the tape. What does it mean? Don't fight the tape. Don't fight the tape means do not go against the trend. Never go against the trend. If you understand something, that if you feel that this is the overall trend and it is going to be on a higher side, then your trade should be more towards the buying. Look for long trades during the periods of bullishness. Find appropriate short trades during the period of bearishness. If you see the overall trend is bullish, buy. You see overall trend is bearish, short. Like for gold, overall trend right now looks bullish. But if there is a small decline of $5 or $10, the day traders would jump and try to make money from shorting trades. But you as a swing trader do not need to short. That's what I'm trying to tell you. Trade in harmony, use some moving averages. So I'll tell you how moving averages work and you can try to take a trade there also. You need to get a bigger picture. Instead of going back to smaller plans, try to get a bigger picture of what the trend looks like. Plan your finances, rule of multiple indicators. Planning your finances is obviously very important, not just in swing trading, but in day trading also. Nobody should exhaust all your savings into day trades or swing trades for that matter. Please understand. The best way to trade with money is once you have put money in your long term investments, in mutual funds, in stocks, you have saved money enough for your education or for your child's education, or it's being invested into something, you have your insurance and everything. Then the money with which you are left with should be used for trading. That should be very clear to everyone. Nobody should borrow money, use their credit cards, take a loan from someone thinking that they will repay this 100, 200 times. Never works out because there is too much pressure, right? Trading should be done with your own money. It should be done with the money which is left to you after you have done your fixed term commitments. Your rents, your electricity bills, it should not be compromised if you lose this money. Your mental health, your physical health should not take a toll if you lose this money. That is the right approach to get into trading, right? I'm not really sure how many people would tell you this, but this is a very basic uh, rule that never put all your money, or invest all your money into trading. Trading is speculative and it may lead to a larger loss of capital if you're not disciplined or not careful, right? Now, what I'll do is I'll take you through the live platform and we'll understand using a few technical studies that how we can apply a day trade versus a swing trade. Till then, if you have any questions, continue to write and I'll take you live to the platform. Okay, I hope everybody can see the live platform now. If you can see this, guys, just if you can't see it, please let me know. I think everybody can see this charts right here. Let me just open the chart for gold, US index also. So let's see. Let's open charts for gold. Click here and for US 30 also. So one thing also, guys, which is very important, both day traders and swing traders, they rely heavily on technical analysis to analyze and trade their markets. Okay, because effects of fundamentals can be, it could be very slow before it comes. And as I said, both swing trading and day trading, swing trading should not be confused with positions based trading, or should not be confused with long term trades. Swing trading also is mostly short term, but it takes a few days or weeks before you get out of the trade. So the idea is that both day traders and swing traders would still rely on technical charts to take the trade. Fundamentalists who normally buy and hold, they are the ones who would be looking for more of a fundamental news. So there's a difference between how a, a long-term trader, like a position-based trader, would see a swing trader or a day trader, right? So if you see the micro levels of supply and demand, which do cause markets to move on a smaller time scale also. But if you see the day traders and swing traders, they try to exploit these smaller movements for profits, right? Day traders do more than swing traders. That's the idea. Okay. So technical analysis is something which is important when you are a swing trader. And we are going to understand that which are these kind of technical indicators which can help you basically to place a trade, and how you can observe it also. I think that is also something which is really important to understand, that if I'm looking at a technical study, then that technical study, how do I have to interpret it? Because a lot of times people are looking at the technicals, but they don't really know how to look at or how to interpret these technicals. So there are RSIs, there are support and resistances which we must look at. There are bullish and bearish patterns. There are Bollinger Bands which we must look at. Let's take, for example, as we are looking at the chart of gold, for example, we start with a very basic support and resistance. Right here, for example, right now, the chart for gold shows you a candlestick pattern where we are looking at daily charts, right? 1 day charts. Okay. Now, one important thing, a key difference between a day trader and a swing trader. When we are looking at the tools and indicators, swing trader would use moving average, support and resistance, RSIs. Day trader will use also support and resistance, but on a smaller time frame. They would also look at moving averages also. Moving average is also something which is normally seen. But also a lot of popular swing traders, they look for breakouts and reversals, right? They look at the trend based trading. And when you see the time frame, swing traders would use different time frame. They will look for 4 hours and then above that. Day traders would look 15 minutes to 1 hour. Let me tell you the difference right now. Right now, this chart, if I make it say 4 hours, which means every candle now represents four hours of movement. For more understanding about technicals, you can go back on my YouTube library and see where we discuss the technical analysis, or we can have a one-on-one session to discuss more about charts. But if you see on the chart itself, we have look at this. Looking at a 4 hours chart right now, a swing trader would look at a support and resistance on a 4 hours chart or more than that. Like every bar which you see, which is here, it represents 4 hours. So this candle right here, this is 4 hours. A candle before that was made for 4 hours, which means I am looking at uh, probably 7 to 11, right? Or 3 to 7, or 11 to 3. Like every 4 hours, how markets have moved. I think let's put it more in a more simpler way, that how markets have moved or how prices have moved in every 4 hours. A day trader would switch this from 4 hours to 15 minutes. That how market is moving every 15 minutes. And you see how charts have changed. Because now, if you see, when I'm looking from a day trader perspective, look at this. So, from a day trader perspective, how a day trader would have worked, because this is a 15 minutes chart. So, we'll quickly make a support and resistance line, but I'll make it in a form of channel so you can understand. See, there is, let's say, for example, something like this. And look at this, right? Now, when you see this right here, just try to understand this. This is a channel which is already broken, right? Now, as I said, a lot of day traders and swing traders, both of them use breakout trading also as their strategy. But a swing trader would try to find this breakout on a 4 hours chart, on a more long term chart as compared to a day trader. So right now, what you are seeing is on a 15 minutes chart, on a small term. So a day trader at this point of time is most likely waiting that if, so either he is provided with a support line over here, which is this, right? So right now for a day trader, this is a support. They could buy and keep a stop loss slightly below this, and they can book their profits also, by the way, here. Look at this, right? This is a short term. Buy at 2564, close your profits at 2569. Would not wait till it goes back here. Again, try to short sell at 2570 and try to make money around this support level. This is how a day trader would work and would wait for the breakouts to happen, right? Because this channel has been broken. See, literally looks like it's bleeding right now. So somebody would have shorted here, right? A day trader would have shorted at this level the moment this broke, and should book his profits here and then buy again over here to book a profit here. So day trader would be more frequent on a 15 minutes chart. Here, if I make it to 4 hours, right now the situation changes completely, because I'm looking at a very, this was day trader right here. See, this was day trader right here. But now look at a swing trader. He gets to see all of this, looking at a bigger market picture. So for a day trader right now, sorry, for a swing trader right now, he's waiting his first entry point. So first and foremost, a swing trader would have traded. Let me make a channel like I did for a day trader. This channel right here. See this. So first of all, a day trader would have bought gold over here. I hope everybody can see this because this is a breakout. This is called breakout trading, guys. When support and resistance, either one of them gets broken. So it seems now that from here market would move higher, right? This resistance got broken here. So it was obvious that from here the markets would, not obvious, but it would be expected that markets would go up from here. Now this happened when? This happened on 13th of September. So ideally a swing trader would enter around this on 13th and then he held on to the trade for a few days till the next resistance. Now obviously in case of gold this is a new high. So it continued. It depends on a swing trader for how long he continues because every day after that the closing was positive. So every next 4 hours he continues to see markets positive and only would close once it has peaked out. So if you see this formation right here, see right here, look at this, right? This consolidation now has been broken. Now the thing is, you would ask that now would a swing trader place a trade? Because what you are looking at is at a breakout. But at the same time, as I said, a swing trader looks more towards a primary trend. What does the primary trend looks like? Look at the primary trend or a intermediate trend. Look at this. The trend is still on the higher side for gold. So a swing trader would wait for gold to drop probably here, right? And then again enter into the transaction somewhere around here because wants to go for a buy transaction because the overall trend is on the positive side. Just make another trend line here. Look at this. Look at this, right? So your buying levels are here. Correct. So here what happens when the clients are sitting and when we talk to them and we ask them that, see, what's your objective, how much time you can commit to actually this. And this is after when they have invested in fixed income bonds and stocks and they have shown interest in trading. So one must ask how much time you are willing to give because a swing trader would wait for this to happen to come here because the swing trader would wait for to trade in a primary trend rather than going with a intraday trend. But an intraday trader, on the other hand, would look at a 15 minutes or 20 or a 1 hour chart at best and try to do multiple in and outs. That is a big difference between how a day trader and an intraday trader would work, right? So let's say even if I have to place a trade as a day trader, because I think for an intraday trader there is right now the market is not right. So if I'm looking at from a day trading perspective, I reduce this to 15 minutes and this is where I am right now. So it reached around here. So I could go for a buy because here, as you can see, this is the next support right here, right? So if I buy now, say 50 units, put a take profit, or let's say take a trade first, right? So this is where my buy is right here. Now the stop loss should be somewhere below this, right? What I'm able to, again, it depends on my risk, but then my take profit has to be to the next resistance, which seems somewhere around here. It's 2572. So I bought at 2566, 50 units, and I would sell it at 72. $6 up, $300 profit, I'm out. Then I'll again probably take a short sell here and wait till it comes down to 2566 or wait till it goes up to 2585 again and again sell it from there. So But by the end of the day, I must close all my trades and wait tomorrow for the new trend to begin. Day traders also trade on the important economic events. Like tomorrow, if there is going to be FOMC news, a lot of day traders are going to do in outs over there, right? So, this is something which one must understand. So, this is how the breakout trading happens, guys. As I also said, that there are support and resistances. There is something which swing traders use, something called a Bollinger Band also. Bollinger Band is also used a lot of times. Let me show you how would you use in this case. So let's say I switch to a 4 hour chart for a swing trader, and from the technicals, select Bollinger Bands. As you can see, it says periods to standard deviation 2. So standard deviation simply means that right now the bands which you see, so there the Bollinger Bands has three bands: the upper band, the middle band, and the lower band. The middle band, which is there, it's basically a sort of a standard, the average line or the moving average line, which tells you the average closing price of gold for 20 days. Okay, like in last 20 days, this line which you see in last 20 days, this is somewhat has been the average, right? Now from that average, how much higher gold prices can deviate, how much lower gold prices can deviate is what Bollinger Bands tell us. So as the price reach to the higher band the most, so this is where from where it is supposed to come down, and this is where the buying should happen. Right now it is again at the moving average. The buying should happen once it reaches to the lower band. The selling should happen once it reaches to the higher band, right? So this is again something which continues to change because it's a 20 days moving average. So every day passing, the 20-day average keeps changing, and that is why the important of the Bollinger Bands indicator is, guys, that it tells you that how much the prices can deviate on a higher or on the lower side at that particular time frame. And this is an important news. Not necessary that every single time the trade is going to be right, but if you see here, like look at this area, right? The buying over here, it has not been able to break this. So the idea is that if this is the average, the middle line is the average, the deviation would be much l- somewhere around here. It cannot get out of this band. I mean, it can, I mean, if there's a big fall, but most likely from how much you can deviate from the mean or how much you can deviate from the average. See this. So it goes within the band. Similarly on the higher side, similarly on the lower side. So a lot of people would take a trade during by using Bollinger Bands also, and most likely the swing traders are the ones who would use Bollinger Bands to take a trade. And this is important to know because day traders who are looking at 1 minute, there's doesn't make sense to look at Bollinger Bands. As I said, there is a lot of breakdown which happens. There are a lot of breakouts which happen when you're looking at support resistances, and whenever the support or resistance breaks, both the traders get in. But it's more about the time frame at which you're looking at. So currently we are looking at gold. Let's say try it out US 30, for example. Right. Let's look at US market right now. Now again, as a day trader, I look at a 15-minute chart probably. 15 minutes chart is not giving me a clear indication, but it is telling me this is what it looks like on a 15 minutes chart, right? I could look at a 1 hour chart then if I'm not getting more clarity on a 15 minutes chart. Now on a 1 hour chart, this is what I see right now. Again, the markets has not moved much today, but if I were to draw a trend line somewhere around this, again, not a very noticeable trend line either, but the buying should, if at all, should happen somewhere around here, right? Look at multiple buying levels here, and then look at the buying levels somewhere around here, right? And these are again very smaller time frames, right? As I zoom out, see the support and resistances, but because I'm looking at a 1 hour chart right here, right? So as a day trader, I am again, if 15 minutes chart, 10 minutes chart, 5 minutes chart, and if I do not get clarity, I wait. But the or I pick a different instrument, let's say Euro USD. Look at Euro USD. I'm going to again take a 15 minutes chart. Now in a 15 minutes chart, see how clear it is. Look at my line here. This is breaking the support, right? And look at the resistance line. Somewhere zone of resistance here. Now this breakout is happening right here. So a day trader would sell with a profit of somewhere around here, right? Look at the difference, 1.1119 and 1.1110. We're talking about the movement of literally from 20 pips to 10 pips movement. But in this 10 pips movement, you would not take 10,000 units. A day trader would probably take a higher quantity and take out smaller gaps. 100,000 units, 10 pips, $100. Or 50,000 units, 10 pips down, $50 profit. You're shorting it here. And then he would buy here with a take profit which is kept around the support levels, right? Look at this band right now. So breakout trading is very common amongst day traders and swing traders both. What makes this interesting is, of course, when you are a swing trader, you take a position on a longer time frame chart and you wait, right? Like for example, people have purchased gold at 2480, 2520, and they're still holding on to it, right? But a day trader is trading every day. 2585 they short, try to buy at 2575, it breaks 2575, stop loss gets hit, again shorts once the stop loss gets hit. So they are trading more. So it's this is something, as I said, guys, eventually it depends on your risk appetite. Also, you need to understand how much time you can provide to this. There are drawbacks to swing trading also. The biggest drawback is it's not something which you can rely for consistent profits. Like sometimes, let's say, you know, things are more short term. Like somewhere we see that the movement in gold for a shorter period of time, it's moving higher and higher and higher. So if there's too much volatility, day trading could be the best way to capitalize if the fluctuations are high, because you can buy and short sell frequently and do that. But then it's up to you that what's your part, because at the end of the day, if you're a person who does not like to give too much time to trading, then swing trading should be your way. And there are a lot of these myths which people talk about, that day trading is more profitable than swing trading. There is nothing like that. Profitability depends on the skill and the strategy on the market condition, right? Not only on the trading style. So it's no such thing that day trading is more profitable than swing trading. A lot of people say that swing trading is easier, right? Because you just have to buy or you just have to short sell and wait for days or weeks. It's not like that. You need to have that discipline. You still need market knowledge. You need patience. Nothing is inherently easier, right? Depends on your approach. One common myth which a lot of people talk about, that do you need a lot of capital to start? You don't need a lot of capital to start. I mean, you can be very flexible. Smaller amounts can be used, but then given that if you're using smaller amounts, then you should not take too much higher leverage, because then you might lose those smaller amounts, right? Another common myth, since you're talking about leverage, people always feel that day traders, they always use high leverage. That's not, it's not the thing. It's up to you how much leverage you want to use. You have put $10,000 in your account. You can might as well just buy only 5 ounce of gold or 10 ounce of gold. You don't have to take a high leverage. It's up to you. So, and it's not something which day traders do more often. In fact, the ones who are disciplined, even if they are taking high leverage, they're always putting a stop loss. It's the not disciplined ones who are taking high leverage, not putting a stop loss, and speculating in a very indisciplined manner. So speculation is not wrong, but not doing it right in terms of risk management, that's the problem, right? So guys, we've reached end to this session. Thank you so much for joining. See, I understand it's fairly new concept for you if you're not traded before, but looking at time frames as a day trader, as a swing trader, how to do it, this is not something which can never be understood. You do not need a financial certification to handle your own investments. I mean, you have it, it's good, but please do not go out and pay money to learn trading. Trading or looking at charts, it can be done with practice. You just have a demo account, attend sessions like this. These are free of cost sessions. And eventually, most important is looking at the prices. Please create a watch list for yourself. Keep a look at the prices. You don't have to be glued to the desk. You can just check the prices in every 4 hours, probably every 4 or 5 hours. You can just use your app and check the price. Where is gold? Where is Dow Jones? Where is crude oil? Where is euro? Where is Apple stock trading at? Like, just make it a part of your schedule, and that's it. And you don't have to commit that I must sit around 9 or 10 hours and look at it. You can always check whenever you like to, but check frequently. That helps to create a sort of price band in your mind, and when that band gets broken on the higher or lower side, you have a breakout, right? So you can decide whether to buy or short sell that time. Again, it comes with constant practice, but if you never try, then you will never know, right? So once again, guys, thank you so much for your time. Today was a different topic, more interesting one, but I'm sure that if you have any doubts, you can always ask. And as I've said, that we are always open to have a one-on-one session. If you like this session, please review us on Google, Century Financial Google reviews. If you want to give a feedback, or if you have any suggestions, do write. If you like the session, please do write. It only helps us to bring more and more topics, more and more sessions for you. And tomorrow, I think it's going to be an FOMC statement. So we are going to conduct session on how central bank interest rate decisions impact your portfolio and what sort of strategies you can use. And tomorrow's going to be a big day, so it's going to be very volatile as well. So do keep a check on the Fed news, and do attend the session 7 to 8 also. We'll discuss about what's going to happen tomorrow as well. And it's going to be because the FOMC news comes a little later, press conference starts a little later. So there's a lot of market fluctuations after 8 p.m. as well. So if you attend the session, we can definitely share some valuable insights which can be helpful to you. Right. So once again, thank you so much for joining this session, guys. I'll see you again tomorrow, same time, with a different topic. And let's continue to create an environment of learning and, learning and trading. Why not? So you have a great night. I'll see you tomorrow. Thank you so much.